April 2025 has been volatile, to say the least. Now, on Liberation Day, which is April the 3rd, US President Donald Trump reveals his Liberation Day tariffs. Now, those tariffs were much wider than the market expected. For example, Vietnam was hit with 46% tariff, China an accumulative 54% tariff, and even Malaysia was hit with 24% tariff. And the market did not take those news very well. Wall Street went into a tailspin. Before the week was out, it was estimated $5 trillion in equity value was wiped out. The dollar did not do any better. The dollar index traded to levels not seen since September 2024. Now on Thursday, the Federal Reserve Chairman Powell spoke. But within minutes of his speech, it quickly became evident that the Federal Reserve is not about to cut interest rates anytime soon. It is concerned with the impact of the tariff on markets, especially on inflation. So, will the dollar continue to decline, or will it stabilize and perhaps even rebound in the days and weeks ahead? For this, I have to refer you to the price charts. Now, what you are seeing in front of you here is the dollar index futures traded out of the Intercontinental Exchange, referring to the weekly time frame, and the most active traded contract right now is for the June contract. Now, in this chart here, you can see that the dominant trend in the dollar index as of this past week has flipped to a bearish bias, meaning to say that prices are more likely to continue to decline. And if it is so, this three-wave pattern that we see from a high of 114.745, which was last traded in September 2022, may unfold in this manner in a three-wave with equality targets anywhere between 90.825 to 94.490. So this will be the medium to long-term outlook for the dollar index going forward. Now, when we want to refer to the lower time frame, here is the chart for the 4 hours time frame of the dollar index futures. Here we can see that the market has basically gone into a sideways consolidation pattern. Now, the low trader is 98.8 this past week. And if we do get a rebound of sort, then there are two possibilities here. One is for a shallow rebound into the 101 area, which represents roughly about 50% of the drop, from 103.310 to 98.8. Now, if we do get a more robust rebound, the best we can expect is for a stronger rebound into the area between 102.345 to 103.310. This is what I would consider a very deep retracement. And if the market does rebound into this bracket of prices, I'll be more than keen to look for a reversal pattern in this bracket of prices in a lower time frame to take my chance and to keep my stop no more than 103.310 and above, and with the idea that the market is going to resume this decline, targeting the low here at 98.8 and perhaps even lower. So this will be my 2 cents worth, and I hope it has been useful for you. And in the meantime, I wish you guys happy Easter holiday. Bye-bye.